Let me begin by telling you something most traders spend years resisting. You don't need more indicators, more strategies, or more market secrets to succeed. You don't need to memorize chart patterns or chase the newest system someone promised would never lose. What you truly need, the only strategy that will ever matter, is the ability to see the market exactly as it is, not as your fears, hopes, or expectations want it to be. Every trader enters this arena believing that success will come from finding the perfect setup. They believe consistency is hidden inside a strategy someone else is selling, a formula someone else discovered, or a technique someone else mastered. But the real truth is far more liberating and far more uncomfortable. You are not fighting the market. You are not fighting institutions. You are not fighting volatility. You are fighting your own mind's resistance to uncertainty. The market offers endless opportunities, but you will only see them when you stop demanding certainty from an uncertain environment. The moment you accept that anything can happen, not intellectually, but emotionally, everything changes. You stop hesitating, you stop forcing trades, you stop trying to control outcomes that were never yours to control. Instead, you act with clarity, with neutrality, and with the calm confidence of someone who understands probabilities, not guarantees. The only real trading strategy you will ever need is this: a mindset that aligns with the truth of the market. Because once you see the market as a stream of opportunities, not a threat, not a test, not a judgment of your worth, you finally trade from freedom instead of fear. This tutorial is not about teaching you a pattern. It's not about giving you a magic entry. It's about reshaping the beliefs that determine whether you sabotage yourself or set yourself free. If you are a beginner, this will save you years of frustration. If you are advanced, this will reveal why you may still be inconsistent despite all your knowledge. Trading is not about predicting what will happen. It's about responding without emotional distortion to what is happening right now. And when your beliefs align with this truth, you don't need dozens of strategies. You need only one: the unwavering ability to execute your edge without fear, without hesitation, and without the need to be right. When you master that, every market becomes an opportunity. Every trade becomes just another event. And consistency becomes an inevitable byproduct of the mindset you've built. Not a prize you chase, but a state you embody. If you strip trading down to its core, beneath the charts, beneath the indicators, beneath the strategies everyone argues about online, what remains is a simple but uncomfortable truth. You don't trade the market. You trade your beliefs about the market. You don't react to price. You react to what you think price means. And you don't lose money because the market was impossible to understand. You lose because your mind filtered the market through fear, hope, or the illusion of control. The only real strategy that will last, the one that will survive every market condition, is the strategy of mastering your own perception. Because the market is nothing more than a mirror reflecting opportunities. It never gives certainty, but it always gives information. How you interpret that information determines everything. Most traders enter this world believing the path to success lies outside themselves. They search for the perfect tool, the perfect setup, the perfect model of how the market should behave. They cling to the idea that if they just find the right combination of indicators, the right timing, the right pattern, then the market will finally become predictable. But the market has never promised predictability. It has never said, if you learn enough, I will reveal my secrets. Instead, the market expresses one constant truth: anything can happen. Whether that truth liberates you or terrifies you depends entirely on your perception. Think of perception as the lens through which you experience every movement on the chart. A novice trader sees volatility and feels danger. A practiced trader sees the same volatility and feels opportunity. A fearful mind sees a red candle and imagines loss. A confident mind sees the red candle and simply notes it as new information. The chart does not change between these two traders, the interpretation does. That is why mastering perception is the only strategy that cannot break, cannot become outdated, and cannot be taken away by changing market conditions. Every edge you ever use is probabilistic. Every trade you take has an uncertain outcome. Every pattern you rely on can fail. But the one element that remains constant is your ability to respond neutrally, clearly, and without distortion. And that ability depends solely on your internal perspective. If your perception is clean, free from the need to be right, free from fear of being wrong, then you can see the market for what it truly is, a dynamic environment offering endless opportunities, none of which carry emotional meaning unless you assign it. Most traders don't lose because of the market, they lose because of the story they tell themselves while in the market. They tell themselves they must win this trade. They tell themselves they must make back what they lost. They tell themselves the market owes them after a losing streak. They tell themselves that if they wait long enough, the trade will come back. These stories turn neutral market information into emotional threats. Suddenly, a simple pullback becomes a catastrophe. A normal correction feels like a personal attack. And before long, the trader is no longer reacting to the market. They are reacting to their fears. Mastering perception means dissolving these stories completely. It means recognizing that every fear you have in trading is self-generated. The market is not punishing you, it is simply moving. The market is not mocking you, it is simply unfolding. The market is not challenging your intelligence, it is simply reflecting the collective actions of millions of participants. When you finally understand this, you stop fighting the market and begin working with it. But to reach this state, you must confront the biggest obstacle in trading, the deeply ingrained human need for certainty. Your mind, by default, does not like uncertainty. It wants stability, predictability, patterns that always work. So when you approach the market with this natural wiring, you expect that knowledge, analysis, and strategy will somehow eliminate uncertainty. You believe that enough information will give you control. You believe that enough experience will ensure outcomes. This expectation is the root of almost all trading pain, because the moment you demand certainty from an environment that offers none, you create a psychological conflict within yourself. You want the trade to win, but you know it might lose. You want the price to move in your favor, but you fear it won't. You want control, but the market is uncontrollable. This conflict expresses itself as fear, hesitation, impulsiveness, revenge trading, and the inability to follow your edge. No amount of technical knowledge can fix this. Only a change in perception can. When you master your perception, you stop trying to impose your will on the market and instead align with the truth of probability. You begin to see each trade as just one event in a series of events, none of which define you, none of which dictate the next, and none of which determine your worth. The emotional burden evaporates. You no longer need the market to behave a certain way in order to feel okay. You no longer judge your competence based on a single outcome. You no longer attach meaning to random price movements. Instead, you embrace the idea that your job is not to predict, it is to execute. You take your edge because it has positive expectancy over a series of trades, not because you need this trade to be the one that works. You hold your winners because you understand that the market will offer far more than what you can see in the moment. You cut your losers quickly because you know that losses are part of the process, not a sign of failure. This is what perception mastery looks like in action: calm, neutral, process-driven behavior. And here's what makes this strategy truly powerful. It never stops working. Market conditions change, patterns evolve, volatility shifts, but perception mastery remains the foundation of consistent performance. When you can observe market data without fear, without hope, and without the need for validation, your cognitive bandwidth increases. You see opportunity faster. You execute cleaner. You adapt without emotional resistance. You become the trader every beginner dreams of becoming, not because you know everything, but because nothing blinds you. This internal mastery also transforms how you perceive risk. Most traders think risk is something outside themselves, something the market imposes. But risk is actually a function of your belief system. When you attach emotional significance to a trade, the perceived risk increases. When you detach, the risk becomes simply mathematical. When you fear losing, you hesitate. When you accept losing as normal, you execute effortlessly. When you seek certainty, you chase trades. When you accept uncertainty, you let trades come to you. Your perception shapes your behavior. Your behavior shapes your results. And your results ape your belief about what is possible. This cycle either builds you or destroys you. Mastering perception ensures the cycle works in your favor. The moment you stop interpreting the market as a threat and begin seeing it as a flow of neutral information, you unlock the only true trading strategy that can produce consistency for a lifetime. You stop being a trader who reacts emotionally and become a trader who responds logically. You stop needing to be right and start focusing on doing what is right. You stop defending your ego and start executing your edge. When perception mastery becomes your strategy, you no longer chase certainty, you embrace probability. You no longer fear losses, you manage them. You no longer hope for outcomes, you act within a framework that does not require hope. And it is only from this psychological state that true consistency is born. Because consistency does not come from the market, it comes from the mind that sees the market clearly. It comes from the trader who accepts uncertainty completely. It comes from the internal alignment between beliefs, expectations, and actions. When you reach this clarity, you realize something profound. You never needed a better indicator, a smarter system, or a secret signal. You needed a new way of seeing, a new way of interpreting, a new way of experiencing the market. Master your perception, and the market becomes a canvas of opportunity. Fail to master it, and every opportunity becomes a threat. Every trader enters the market believing they need to predict what's going to happen next. They believe that mastery means being right, that confidence comes from certainty, and that success is measured by how accurately they can forecast a chart. But the truth, one the market will teach you whether you accept it or resist it, is that prediction is a psychological trap. It feels empowering, but it binds you to outcomes you cannot control. It promises confidence, but it delivers emotional instability. It gives you hope, but hope is the very thing that blinds you to what's actually happening right in front of you. An edge, by definition, is nothing more than a higher probability of one outcome over another. It is not certainty. It does not guarantee results. It does not eliminate risk. Yet most traders treat their edge as if it should be a magic key that unlocks constant profits. And when a trade goes against them, they assume something is wrong with their strategy. So they tweak it, adjust it, abandon it, or replace it with something new, never realizing that the flaw is not in the edge, but in their relationship to uncertainty. Your edge only becomes powerful when you stop demanding the market to confirm it immediately. When you no longer need a single trade to win. When you no longer expect the market to behave according to your analysis. Only then does your edge reveal its true potential. Because an edge can only express itself over a series of trades, never over one isolated moment. And as long as you impose your expectations on the market, you will sabotage the very edge you are trying to exploit. The moment you grasp this truth, everything about your trading mindset begins to shift. You stop obsessing over outcomes. You stop looking at every trade as a test of your skill or a reflection of your worth. You stop reacting emotionally to randomness. Instead, you begin to think in probabilities, calmly, objectively, and without attachment. You understand that being right or wrong on a single trade is irrelevant. What matters is whether you followed your edge with discipline, clarity, and neutrality. Trading becomes difficult only when you fight the probabilistic nature of the market, when you want guarantees, when you crave control, when you try to force certainty from an environment that never offers it. This conflict between your desire for predictability and the market's inherent unpredictability is what creates fear, hesitation, and emotional distortion. It's not the market that hurts you, it's your expectation that the market should comply with your analysis. But the market is not obligated to behave a certain way. It does not care about your entry. It does not know you exist. It does not punish or reward. It simply expresses information. When you align yourself with probability rather than prediction, you meet the market on its own terms. You become flexible instead of rigid, adaptive instead of reactive, observant instead of emotional. This shift in perception allows your edge to breathe. It allows your strategy to unfold naturally over hundreds of trades without being contaminated by emotional interference. You stop cutting winners early because you're afraid they'll reverse. You stop holding losers because you hope they'll turn around. You stop chasing trades because you fear missing out. You stop skipping trades because you fear losing. Each of these behaviors, every one, comes from the need for the market to behave in a way that makes you feel safe. Probability doesn't require safety. It requires acceptance. Acceptance that losing is part of winning. Acceptance that randomness is unavoidable. Acceptance that outcomes are uncertain, but the process is controllable. When you accept this, you begin to trade with the mindset of a true professional. Instead of thinking, this trade has to work, you think, this trade is one of many. If it fits my edge, I take it. If it doesn't, I wait. Instead of thinking, I knew it, or I should have exited earlier, you think, that outcome was just one event in a series. I'll let my edge reveal itself over time. Instead of thinking, I need to make back what I lost, you think losses are simply the cost of doing business. This is how probability-based thinking transforms your edge into a reliable tool rather than a fragile hope. Most traders sabotage their own edge, not because the edge is weak, but because their expectations are unrealistic. They want the market to be something it's not. They want their analysis to be right immediately. They think consistency means being right often, rather than behaving consistently with their process. They do not yet understand that the edge is not a guarantee. It is a statistical advantage that requires long-term execution. Imagine flipping a coin with a weighted bias. You cannot predict the outcome of any single flip, but over a large enough sample, the bias reveals itself. The same is true for trading. If your edge gives you a 55% probability of winning, you still might lose 3, 5, or even 10 trades in a row. But over hundreds of trades, the probability curve bends in your favor, as long as you execute the same way every time. The problem is that most traders don't execute the same way every time. They adjust their size randomly. They break their rules when scared. They force trades when impatient. They hesitate after losses. They deviate from the plan whenever emotions spike. And then they wonder why their edge doesn't work. The edge didn't fail, they did. Not because they lack knowledge, but because they lack the mental discipline to act according to probability rather than emotion. Your edge becomes powerful when it is free from emotional contamination. That means you take every valid setup, not just the ones that feel good. You manage every trade according to your plan, not according to fear. You cut losses consistently, not selectively. You let winners run according to your rules, not your impulses. You see losing trades as normal events, not personal failures. When you reach this level of psychological alignment, something remarkable happens. Trading becomes effortless. Not easy, effortless. You no longer feel internal conflict. You no longer battle your own fear. You no longer get attached to outcomes. Instead, you execute with calm repetition, trusting the law of large numbers to do its job. This is where true consistency is born. Not from prediction, not from being right, not from finding the perfect strategy, but from aligning your actions with probability at every moment, letting the edge play out without interference, letting the trade unfold without emotional interpretation, letting the market move without needing it to obey your expectations. When you stop demanding that the market behave a certain way, you discover something profound: freedom. Freedom from fear, freedom from pressure, freedom from the emotional weight of needing to be right, freedom to execute your edge with clarity. And with that freedom comes the trader you always wanted to become. Not the one who predicts, but the one who performs. Not the one who reacts, but the one who responds. Not the one who fears loss, but the one who accepts it. Not the one who chases certainty, but the one who embraces probability. When you reach this state, you realize that you never needed the market to behave a certain way. You only needed your mind to align with the truth of how the market actually works. And in that alignment, your edge becomes unstoppable, not because it guarantees profits, but because you finally stopped interrupting it. If you want to understand why most traders fail, you need to look no further than mind itself. The market doesn't create inconsistency, the mind does. Every losing streak, every premature exit, every missed opportunity, every emotional trade is a direct result of the internal state of the trader. When your decisions are guided by fear, hesitation, or hope, no strategy, no indicator, and no amount of experience can rescue you. You can have the most sophisticated edge in the world, but if you bring uncertainty and emotion to every decision, consistency will remain forever out of reach. Consistency is not the product of knowledge alone. It is not the result of knowing every pattern, every indicator, or every statistical rule. Consistency is born in the mind. It is born in the moment when the trader sees the market exactly as it is, without distortion. It is born when fear no longer dictates exits, when hope no longer fuels entries, and when hesitation no longer freezes action. To trade consistently, you must first trade objectively. You must trade the present, not the future you imagine. You must trade reality, not expectation. Fear is the most obvious enemy of consistent decision-making. Fear shows up as the voice that whispers, "What if this goes wrong?" Or "What if I lose more than I can handle?" Fear manifests in hesitation. Hesitation to take a valid trade, hesitation to hold a winner, hesitation to accept a loss. Fear manifests in overtrading, revenge trading, and avoidance. And all of these behaviors rooted in fear directly undermine your ability to perform consistently. The market doesn't care that you are afraid. The market doesn't slow down for your hesitation. The market simply moves. And every movement you misinterpret through fear is an opportunity lost, or worse, a loss incurred. Hesitation is another subtle but deadly obstacle. Hesitation arises from indecision, uncertainty, or lack of trust in your own analysis. It can be as simple as delaying an entry by a few seconds, or as subtle as moving a stop-loss slightly further away because you're unsure. Hesitation is dangerous because it injects randomness into your trading process. Even the most reliable edge becomes irrelevant if the execution is inconsistent. Every delayed entry, every second guess, every mental what-if compounds the probability of underperformance. Consistency cannot exist in hesitation. Consistency requires action, timely, precise, and unflinching action. Emotional distortion is perhaps the most insidious of all. This is when you take a perfectly valid trade and interpret the market through the lens of your personal feelings. A winning streak inflates confidence to the point of overextension. A losing streak inflates fear to the point of paralysis. Emotional distortion causes traders to impose meaning on randomness. A small loss becomes catastrophic. A minor gain becomes validation. The mind, when distorted, transforms neutral market data into personal significance. And every decision made under this distortion, no matter how technically correct it seems, is inconsistent with probability, edge, and reality. Trading what is rather than what you hope for is the antidote to all of these problems. To trade what is means to observe the market with clarity, to accept its movements without judgment, and to respond according to your predefined edge. You no longer project outcomes onto the charts. You no longer imagine how the trade should develop. You no longer hope for a reversal, a breakout, or a miracle. You simply acknowledge the present moment, assess the probabilities, and act decisively. This is the foundation of true consistency. Every market condition can be traded effectively if you approach it from this state of neutrality. Trends, ranges, spikes, and reversals, none of them are inherently difficult. They only become difficult when your mind imposes expectation and emotion onto the scenario. Fear makes a small pullback feel like a crash. Hope makes a minor rally feel like a sure win. Hesitation turns a moment of clarity into a missed opportunity. Emotional distortion corrupts every decision. Remove these internal obstacles, and every environment becomes navigable, every setup actionable, every trade just another execution of your edge. This is why so many traders endlessly search for the perfect system or the holy grail. They're trying to outsource consistency. They're trying to make a mechanical formula replace a psychological state. But no system, no matter how sophisticated, can compensate for a mind that is unsettled, fearful, or emotionally entangled. Only the disciplined mind, trained to observe without distortion, can deliver the true consistency everyone seeks. Developing this mental state is a process, not an event. It is built trade by trade, decision by decision, moment by moment. You start by recognizing fear and hesitation when they arise. You start by noticing emotional distortion in real time, instead of just retrospectively blaming the market. You start by committing to trade according to probabilities, not personal desire. And over time, as these habits strengthen, the mind becomes neutral by default. You no longer need constant reminders. You no longer second guess. You no longer react emotionally. Consistency, once elusive, becomes the natural result of your internal state. One of the most critical aspects of trading what is, rather than what you hope for, is detachment from outcomes. Many traders treat profits and losses as moral or personal judgments, as indicators of their competence or worth. This attachment breeds fear, hesitation, and distortion. When you detach from outcomes, when you view each trade simply as an opportunity to follow your process, you eliminate the emotional swings that destroy consistency. You allow your edge to manifest over time without interference from hope or fear. You become patient with uncertainty, disciplined with probability, and neutral in response. Consistency also emerges from process adherence. When every decision is aligned with a clear, objective process, you remove randomness from your trading behavior. The process itself becomes your anchor in volatile markets. It provides structure when chaos surrounds you. It ensures that every trade is a reflection of your edge, not your emotional state. Fear may appear, hesitation may creep in, emotions may surge, but as long as the process remains intact, consistency remains achievable. Another crucial aspect of trading what involves observing without judgment. Judgment is the enemy of clarity. When you label a trade as good or bad based on personal expectation, you cloud your perception. When you celebrate winners prematurely or mourn losers disproportionately, you distort reality. Consistency demands that you treat every market event as neutral data, devoid of personal meaning. Only then can you make decisions that are truly aligned with probability and edge, rather than with hope or fear. The disciplined mind also learns to embrace losses as part of the natural flow. Losses are not punishments, they are data points. They are feedback that allows the edge to operate effectively over time. Fear of loss creates hesitation. Desire to win creates hope. Both compromise consistency. By accepting losses neutrally, you maintain clarity, execute according to your edge, and allow the probabilities to work in your favor. Ultimately, consistency is the natural product of internal alignment. It is not something you chase through external tools or indicators. It is something you cultivate by mastering your mind. Every decision free from fear, hesitation, and emotional distortion brings you closer to a state of flow, a state in which market information is absorbed neutrally. Edge is executed without interference, and outcomes are irrelevant to your internal equilibrium. In this state, trades are not personal, strategies are not moral, and results are merely the inevitable byproduct of disciplined behavior over time. The moment you trade what is, rather than what you hope for, you enter a realm where the market stops being an adversary and becomes a mirror. Every fluctuation, every candlestick, every tick becomes information to be processed, not emotion to be feared or wished into existence. You no longer fight the market, you observe, you calculate, and you act. Fear and hope lose their grip. Hesitation evaporates. Emotional distortion fades, and what remains is a mind aligned with reality, capable of executing an edge consistently over the long term. This is why professional traders, those who succeed over decades, do not rely on luck or prediction. They rely on mental clarity. They rely on neutrality. They rely on detachment from outcomes. They rely on the understanding that consistency is not a product of the market behaving the way they want, but of the mind responding the way it must. And this understanding is the ultimate strategy, the true foundation of trading mastery. Consistency is not a distant goal, it is the direct reflection of your internal state. Every trade you take free from fear, hesitation, and emotional distortion strengthens it. Every trade you take hoping for what should happen weakens it. Every trade you take trading what is rather than what you wish for builds the unshakable foundation of long-term success. It is here, in this alignment between mind and market, that you discover the essence of trading, not prediction, not luck, not skill alone, but the disciplined, neutral, and unwavering ability to act clearly in the face of uncertainty. In the end, trading is not about finding certainty in an uncertain world. It is about mastering yourself in the midst of it. Every indicator, system, or strategy is secondary to the clarity of your mind, the neutrality of your perception, and the discipline to follow your edge without fear or hope. Consistency emerges naturally when you trade what is, not what you wish for, when you respond to probabilities instead of predictions, and when you allow the market to reflect opportunity rather than threat. True mastery is the ability to act with calm, confident alignment every single time.